Holy moly. What's going on YouTube? This force up was insane today. Insane. I know I haven't spoke or got on YouTube here in a minute. Life is rough. So last video we had called the absolute bottom. If you're interested in that video, put it in the description below as in the prior video. I said Sunday, right here during a time cycle gone math, you should buy everything you can for this rally week. And then as we continue, it was going to be gnarly. So I'll put that video in the description. Our buy point was correct. We did get a massive rally, but this candle I want to talk about. This is some crazy, crazy manipulation. That's beautiful. I mean, honestly, it's art. So let's talk about a couple last trade days here. So with the Hanging Man candle, short buys coming in for yesterday. We made a mint on these, and I got stopped out of my puts this morning for like 475. So we made 1,900 yesterday on puts on the ES, and then got stopped out for a 475 green carryover on the Tasty. So this was the Hanging Man, right? And then anything underneath that body. So this is how I usually draw those. I want you to recap and see why we shorted the Hangman and what the confirmation was, so on and so forth. Let's get to a new chart here. We'll just do this, and I'm just going to clear a freshie. All right, so when you get these Hanging Man candles like this, and you are just at a historical point of interest, point of time, right? In historical for us, clearly it's this many rally days in a row. If you're talking 1, 2, 3, 4, 5, 6, 7, and then the eighth day Hanging Man, you're going to get a little pullback. You know, at least probability-wise and or risk management, you're doing it correct. So how we shorted this one was utilizing the prior body. This is the only way I do it. So you look at the body. It's a high body fat doji, essentially. Nothing clean, but we look for the confirmation of that, right? So when the Hanging Man was set in right here, this is the Hanging Man day, we come into this day right here, and this was the gap fill. If you don't remember the daily gap fill, and this is why we shorted it as well, we left this gap open right here. We'll make these levels white. And we know a lot of the time the first gap attempt does not fill. So when price action creates a gap, goes down and comes back to test it, a lot of the times we fail it for a fresh low, come back and plow through it. So we were expecting the gap fill coming up here from the bottom call that we made here. So a lot of reasons why we did that. You can check the video of all the RSI and everything we went through. But the day trade for yesterday, it's a beautiful Hanging Man here, was confirmation breakdown of the gap fill and the Hanging Man candle. So what we had opened is with a double gap, right? So yesterday's highs was like right here. And then we had a gap in between yesterday's highs and the gap that was created on the daily chart prior. So we had a double gap zone. So those two gaps together, we knew it was going to be a fill. So this full upside move right here, no way. We went actually short off of this. And then you wanted to see a confirmational back test of the body right here, the shaded zone, for you to go short. So we had a beautiful short in the morning, popped, creates the most perfect little head and shoulder, and gives us a little snap. So let's look at a couple oscillation indicators that probably would have helped us out very keenly here, especially on the 5-minute. And we have a new chart, so we got to redraw our halfway point here for 50 RSI or close to. Bam. So a couple things about this. The Mac has been working very cleanly, right? Very, very cleanly, actually. And we've been having a lot of luck with that. And a lot of the times when you pair indicator on indicator and stack them together, you're going to get more and more resolution for your trade. So once this breakdown of the body occurred, right, it struggled to stay above, snapped back down, started consolidating at the body, gave one more little long fake out, short stop out. But as you can see on the indicator here on the MACD, we had a small wave already starting. You're not really looking for that next big long move. You already have the moving averages crossing, and you had the RSI during this consolidation point already breaking into new lows. So both oscillation indicators were already helping you out during this consolidation. So you had about a half hour to take the trade, or at least set up for it, right? Because you have a huge rejection point. So why not going short into the zone? Obviously stopping out with some hard open closes above the tops of the day here. Obviously this is high day, but the double top that we had here, obviously stop that out, make it a triple and catch the wash. So we ended up catching puts at the end of the day all the way down, grab some profit here, left two on. We had a bunch of open P&L, and it opened up into this day. Let's talk about this day and how we might have navigated this reversal. So I was short bias this morning coming all the way back down to here, and then I seen this force up coming. There was not a whole lot of indicators going up. This whole consolidation point right here into yesterday's lows was just really messy. You can notice where everything was just relaxed. These algos were shut down, getting reprogrammed, and ready to turn on the friggin' boosters, man. So that was a very dangerous zone. So let's talk about how I would have navigated this differently. So the engulfing red, right? This gnarly red day, I would have fibbed this out. Well, we had this fibbed out in the red immediately. I don't know how that turned back to default, but I like these to be white, a little easier to see for me. There we go. And I know I can save that as default. Hopefully that works. All right. So once we go to intraday for this, we noticed that this Fibonacci of the engulfing, right, this big red candle day here, slammed down right after the hanging man candle, has a lot of pockets to use, right? So when the 0% line was recovered, this is where that danger zone would have been, okay? If we are not breaking down past the candle and creating fresh lows to magnet to either the red dash line, which is the 50 SMA daily, or the green line right here, which is the 100 EMA daily. I expected that quick short down there to be a magnet, to come back down to moving average before it attempted a push back up. And that's why I was short buys here. Coming in, we made some really good money. We had a couple thousand here, 600 on the other account, and we closed out puts for 475. They stopped out right here. As it started getting wild because it left this gnarly gap. So let's talk about these fibs. Now the fibs are from the prior day, obviously, and what are the pockets and what are the danger zones? As we just said, 0% is the first danger zone. The close of the candle. So this is obviously not how you spell close, C-L-O-S-E, was the 0% line. Now, once it's above that, you can see in pre-market it had that fresh low dip. The market loves fresh low dips to scam you, to tantalize shorts, right? Kind of like the carrot in front of the donkey. Like, here, short this. Look at this trend. It's so beautiful. Oh my God! And then pending the prior days close, we could have avoided that. So we had the wick right here. This is the body. And above, obviously up and away. So once it got through that, and here's where the real kicker is, right? The golden pocket zone between the 38.20 and the 50, this is the decision zone, okay? It gave you confirmation of the day for the squeeze. It was beautiful, really. It came up to the decision zone, shorted, and when I was in chat, I was like, hey, we got to fill this 15-minute gap right here. This is going to be a historic level. I don't understand what this dude is doing here. That's going to be a prominent level, okay? That pre-market gap. And sure shit, it was confirmation for a long. It was a very early one. I wouldn't have taken this one, but I made money shorting into this, which was great. And then I looked for a retest, and that retest never happened. Look at these force-up candles. That was when the buying kicked on. The manipulation was crazy. It just went doo-doo. It was straight up, man, straight fireworks. So what could have helped you to get to navigate this with fibs? First and foremost, the golden pocket, that one we were just talking about between the 50 and the 38, that has to be respected immensely. So this channel between 50 and 38.20, this is a nuts zone, okay? And when you seen this right here, this breakout, you knew the algos were on. This was a force-up manipulation. It broke through this channel, which is our golden pocket, from a gap tag no fill, pushed, consolidated, back tested. Here's the 50 fib right here, right? Look at that little back test of confirmation. Straight through the zone. You expect it to back test to the zone. It did to the penny. Consolidation. And look at that, like the oscillation. We're showing you downside everything, but if you notice, like the force up from the VIX and dollar, and you can see if you go through some of those too on the day, they were just detrimental. They were creating gaps to the downside. The dollar was going against the grain here. So when we started ripping, it was literally 945 central. And 945 was kind of that peak top. And you notice the dollar never ripped past after 945, just hit that pre-market resistance. So there's a lot of kind of little tiny markers in there. They're not easy to read today by any means. So don't beat yourself up if you didn't get the extra confirmation. But this cut through right here, that was gnarly. And then the back test, you can see in that little 5-minute consolidation flag, push right to the next zone, 7860, push right to the next zone, 100, breakout, gone with the wind. I mean, that's just insane. So absolute manipulation force up. So I like to make Fibonacci points inside larger Fibonacci points. I call them hidden Fibonacci points, right? So I would have made one into some of the bigger golden pockets. And the golden pocket here is the 50 to 38.20. And if I would have seen some interaction like this, I'd have been like, well, where is this thing going? Well, in between the 50 38.20, that's something that I would have been watching very close for an intraday scalp. Let's turn this purple so we can see it. There we go. So this Fibonacci point, when we came back and tested it, I would have had points of interest of profit take, and you can see it just melt through these things just inevitably, like 1618, pulled, came back to the 100, poof, right to the 2618, huge squeeze, wait for the daily, that's the 423.60, and then continuation. There was just no stopping it. So one of the things you would have used is the golden pocket, push, the confirmation of that push, the oscillation indicator showing you that it didn't want any, there was no moving average crosses. And what I'm talking about a lot of the time on stream is the 5-minute MAC cross. If the 5-minute MAC cross is not in your favor, don't even take the trade. If you are looking for a short, and you've seen this MAC right here, perfectly no moving average. Not really looking at the histogram. Histogram can tell you some things, but if the RSI is pegging high and sticking hot and sticking hot and sticking hot and just resetting over and over again, which you would have seen this on the 1 minute a little easier, but the 5 minute MAC cross, I would have never touched that short until he would have got across. Now, again, that didn't even work out later on because it got pinned. And when you see price action pinned sideways and manipulate it, they slow the price action down. They allow no highs, no lows. It's only a brick, right? Looks like a perfect, almost I don't know, skateboard, name it. I don't know. You name a long square rectangle cylinder here. That's going to be perfect consolidation, and when you start looking at the zones, right? And this is why volume beat systems that we use work well. So the top of this zone and the bottom of this zone, when there's indecision channels like this, we look at the volume, okay? And if you look at the volume and we zoom in really close to the consolidation zones, whatever the taller candles are closing on right here, that's what party is in control. So from this point, it is buyer control. From this point, it is buyer control. From this point, it is buyer control. No selling candles ever came close to the height. This only works very well during consolidation. Please don't use this on trend. This is for manipulated sideways moves when your oscillation indicators aren't working, or just too manipulated because they ran too fast and the price action wants to be held up. There's nothing you can do about it. The market's going to do whatever it wants. We can only play what we can play. Okay, but that volume beat system would have helped you out there. The 1 minute probably would have told you a lot more info too. Sometimes I go to the 1 minute on manipulation days like this, and we can see, and it shows us a whole bunch of credit as well. Coming into the zone here, buys high, buys high, buys high. So buyers, again, no sellers were in control, one bit higher than this. So this consolidation would be manipulation holds and, a good pattern to push. And, you can see a couple different little MAC crosses, recrosses here, small wave for a beat out, never coming back to cool. RSI was always bought up right under the 50 line. Those are all little tiny inclinations that you could say, definitely leaned to the long side, so on and so forth. So those are a couple of key points that I would have been kind of iffy on. And now you're looking at the daily 1618, which we almost hit. And this is yesterday's body, which we fibbed out, right? So your target is going to be the 1618 over the 100 fib. So we use the fibs here. So if you slingshotted your point of interest from start to finish, you will get this 441.26 for the 1618, and we almost got it end of the day there. So you would have been able to hold this and wait for that 1618 magnet and never get out. She was a complete controlled, we call this a controlled buy. When something on the 5 minute or 1 minute, depending on what it looks like that day, it never goes back under the 10 SMA. So I have a 10 SMA in the dash blue right here. And you notice that it never, ever just gives it up. It's just pinned to that 10 SMA the whole day. That's a controlled buy. The algos are in control. They're controlling the price action to pin to the 10, and it never lets up, which is fine. You just got to be able to identify those things in manipulation and be able to play it. So I hope some of that helped. I hope you guys caught some of the bottom from the last video. And for the further videos and prediction, tune in Sunday because we're going to go into a whole bunch of hypotheticals on where the rally might go. Tune in next.